Robinhood shares tank as payment for order flow may come to an end. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of Heise Says US. Grab your stein of coffee. Let's have a look at this article from CNBC discussing, well, the potential for Robinhood's, frankly, most of their business model to just collapse. What do you think? Are you a fan of, the ability to pay for order flow? Or, would you rather people actually have to pay for brokers? Well, Robinhood tanks after the SEC chair tells barons that banning payment for order flow is a possibility. And if we have a look here, we can see, yes, their share price is now at $43.64 USD, down 6.606% in the past 5 days. So there it goes at 45, boom, it's down. Let's have a look at the max data. So yeah, it jumped up to 55 and has slowly been heading down since. Are you an investor in Robinhood, guys? Is it something that you invested in? After my waste of money buying into Coinbase, I thought I'd let this this IPO just sit for a little bit. So shares of Robinhood dropped Monday amid several bouts of bad news for the brokerage app. Robinhood stock fell 6.9% to $43.64 per share after Securities and Exchange Commissioner Chairman Gary Gensler told barons that banning the controversial practice of payment for order flow is on the table. Gensler told the outlet that payment for order flow, the back-end payment brokers receive for delivering clients' trades to market makers, was an inherent conflict of interest. Payments for order flow is one of Robinhood's largest revenue sources, and the way the millennial favored stock trading app is able to provide zero commission trading. Payment for order flow is a controversial practice that had garnered attention from the financial industry regulatory authority and Main Street. Asked for clarification, an SEC spokesperson declined to comment on this story. Gensler has for months said that an outright ban of payments for order flow is among several options that regulators could introduce. The SEC has said it will also consider clearer and more rigorous brokerage disclosures as another possible alternative. Following an epic short squeeze in GameStop's stock in January that forced Robinhood to limit trading on certain securities, Robinhood's CEO, Vlad Tenev, was forced to testify to the U.S. House Financial Services Committee in February. Legislators criticized payment for order flow for the conflict it has with market makers like Citadel Securities. We think payment for order flow is a better deal for our customers versus the old commission structure. It allows investors to invest smaller amounts without having to worry about the cost of commissions, Robinhood CFO Jason Warnick said during the company's virtual roadshow before its IPO. Robinhood has said that if the PFO payment for order flow model changed, the brokerage and the industry would be able to adapt. Gensler's comments come after the SEC said Friday it is stepping up its inquiry into so-called gamification and behavioral prompts used by online brokers and investment advisors to prod people to trade more stocks and other securities. Shares of Robinhood were already lower Monday after CNBC reported that PayPal is exploring ways to let users trade individual stocks. Now, that's interesting. That's very interesting. As part of the expansion, according to one of the sources, the payments giants hired a brokerage industry veteran to lead invest at PayPal, a previously underreported division of the payments giant. Robinhood went public on the Nasdaq last month, hitting the public markets it seeks to democratize for amateur investors. Since the debut, shares of Robinhood have had a wild ride. After sinking on the first few days of trading, the company had a meme stock moment when it rallied 50% amid retail investor interest. The stock is up more than 24% in August. So there you go, everyone. The end of payment for order flow. What do you think? What's the solution or the takeaway to this one? Well, let me jump on my soapbox. Well, payment for order flow is a controversial practice, and there is well, definitely a conflict of interest between the broker and, who are they representing? You, the retail investor, or the market maker? But also the ability to get in the market cheap, virtually no fees, no charges. That really allows many more people to even jump into the market. It's what I'm using for my pocket money investing on the US stock market. Rather than buying one share, I'll split it up to buy several, just small amounts, and then just build that up over time. So there are advantages and disadvantages. Do I care that they're making money, getting a fee from a market maker? Not really. Do I worry about I'm not investing in meme stocks. I'm investing in boring little things. It would be a shame if this opportunity for people to get free access to a service is taken away by government regulation. What do you reckon? Let me know your thoughts and your takes on this one in the comments down below. Thank you all for watching. Like, share, and subscribe to the channel if you're a fan. There are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for Self-Wealth or Stake, where you can buy partial US shares, and once you fund your account, we each get one free share. You can use Amazon, eBay, Independent Reserve, or Aussie Broadband, buy our merch from Heise Says, or use Gold Pass from the Perth Mint or PayPal. Take care, everyone, and I'll see you all next time. Bye for now.